Okay, everybody, it is me, Gregory Mannarino. It is Monday. Just starting out to be a beautiful day. It always is, you know. Uh, Monday, February 27th, 2023. Let's start off with the economic news because I love the way they're spinning this. It's always the same story. It's a deception. And it's a distraction. So if you were to go to Bloomberg, Fox Business, CNBC, they're going to tell you about this miraculously good durable goods number that we just got here. But what they're not telling you is in aggregate overall, durable goods orders just fell off of a freaking cliff well below forecast. What they're trying to convince you of is one thing. You can look at durable goods orders from many different perspectives. You can look at core durable goods, which is the one they're pushing, and it's great, it's fantastic. You can look at transportation stripped out of that number, or you can look at the aggregate number. Durable goods orders, all of it put together. Well, again, that's the number you need to pay attention to, and that number is abysmal. It literally fell off of a freaking cliff. But again, what else would you expect in this kind of an environment? Look here. Don't look over there. Here's the truth, people, and you know this already. The entire financial system, including the markets themselves, and everything connected to it, this is all coming apart. It's coming apart very rapidly. The global economy is contracting still at its fastest pace on record. Debts and deficits globally are out of control here. And quite frankly, the financial system is dying. I mean, you all know this here. Henceforth, why you're seeing the dynamics in play that we currently have here. What are central banks doing? What are central banks doing that's getting really no attention here, honestly, anywhere? Maybe on some other YouTube channels. I'm not even sure about that. But you know, and I know, central banks are destroying the purchasing power of their currency by design. They're killing the current system. Well, what does that actually mean, that they're killing the current system? Why would they be doing this? Well, because a new system is coming. They already have it. Central banks, believe me when I'm telling you, they already have a completely new system. It's ready to roll out. Absolutely. It's been ready to roll out probably for an entire decade. They are just bringing the world to the financial brink, okay? They're going to push us off of the edge very, very soon. It's already happening. You know, speaking about that, I ran a poll yesterday right here on this blog where I had proposed the question, where do you think the MMRI is going to be by the end of March? Most of you, the vast majority of you, believe the MMRI will break 300. If the MMRI breaks 300, do you believe, I guess this is the question of the day, do you believe that the stock market will be anywhere near where it is right now? I don't think so. Again, what is the MMRI measuring? It's measuring risk in the stock market by gauging risk in the debt market. Now, risk in this market here, and then we're not just talking about the markets here. The whole financial system is, becoming very, very risky for all of us here. We have the purchasing power of the currency being sucked out by design. Central banks are doing this on purpose. They're killing demand. Henceforth, why we got this durable goods order this morning, which literally fell off of a cliff. Again, forget what they're trying to tell you. If you were to go, again, open up like a new window here and go to Market Watch, go to CNBC or Fox Business, they're going to show you core durable goods orders. And of course, you know, that calculation looks all lovely and fantastic. But if you look at durable goods in aggregate, it's just over. But what else would you expect here? What are central banks doing on top of killing their currency? Not only are central banks here sucking the purchasing power out of their currency, making life harder for everybody. And it's just so interesting here. Do you remember last week we had the mainstream propaganda ministry? Oh yes, consumers are spending more. They're spending more. What that means is, this is what they're trying to sell you, is that the consumer is strong. They're out there and they're spending. What they're not telling you, again, the dark underbelly, is they have no choice, because inflation is continuing to rise as the purchasing power of the currency is being evaporated. It's an astonishing thing for me, and I'm sure to you, to see how they spin this every which way you can possibly imagine in some kind of a psyop. It's all this is. If you are unlucky enough to have to sit there like I do and watch the mainstream propaganda, look, I know how to read it, and so do you. Like, for example, with this durable goods orders, they're showing you the core number. They're not talking about the number in aggregate. With regard to consumer spending, oh yeah, they're spending, but they're not telling you why, because they have no choice. The consumer has no choice but to spend. What do we know is going on, people? Let's look at the consumer. The consumer is getting wiped out. How do we know that? Okay, we heard from 2 weeks ago, we had Walmart, Target, all the big retailers saying the consumer is maxed out. They can't keep up with rising prices, but they're spending, duh, because they have no choice. Do you see the game? All of this is a game of deception. One of you out here made an interesting comment, I believe it was yesterday or the day before, that the entire system is based on perception. This is something I've been trying to tell people. The entire system is based on perception and deception. And the mechanism here being pushed by the mainstream is all a deceptive tactic to twist people's perception into a distorted sense of reality. That's all they do, okay? To try to convince you, again, that what you're seeing is not real. What did they do? They floated out the thing, the troll, the gnome. You know what this is, right? This is Janet Yellen. This is what she looks like. Imagine this face with like some kind of a doughboy haircut in white, of course. That's what she looks like, okay? We got all the data that they're telling us. Inflation is continuing to rise. As a matter of fact, faster than the Federal Reserve even believed it would, which is a complete lie. And Yellen came out to tell you that prices are falling. You know that they're not falling, but they have to parade out some I don't know, figure like that who's supposed to be telling you the truth, and all she's doing is lying through her teeth. But this is the situation. What else would you expect? Excuse me. My nose is running. All right, let's turn our eyes over here at the market. We just finished a pretty abysmal week. In fact, I think this has been the worst, the week we just had, week in this market since late last year. Okay, market's been falling off of a cliff. You and I know why. We knew it was going to happen if we crossed the first red line in the sand with regard to the MMRI at 250. Okay, so this morning we got a rebound in stock futures, meaning, well, stock trading doesn't start for about 25 minutes from the time I am doing this. 35 minutes, I'm sorry. 35 minutes from the time I am doing this. And that means stocks are slated to open higher. But let's look over at the risk gauge, our risk gauge, the MMRI. Link in the description of this video. It's sitting at 257. It's not a pretty spot. Risk in the market is rising. The 10-year yield is higher. The relative dollar strength actually is slightly lower this morning. Gold and silver aren't really doing too much. Gold is slightly higher. Silver is under a little pressure. Cryptocurrencies are relatively flat. Bitcoin around 24,000. Crude oil flat to slightly lower. Natural gas is up over 5% right now. Natural gas, I've been talking about this lately, has been on a wild ride as of late. I still believe it's a spot you and I maybe want to look at. Again, if you do subscribe to my free newsletter, link in the description of this video, I send out at least 2 lists containing exchange-traded funds that will give you exposure to commodities. But if you really want exposure to commodities, people, here they are right here, okay? And you can have it delivered right to your door. They call these things commodities, but these are real money. You all know that. Anyway, with regard to commodities, I think they're going to be going much higher in the long run. Again, why? Why does Greg Mannarino say this? Because people ask me all the time, what do we know is going on? Central banks are destroying their currencies. What else do we know? Commodities are priced in dollars. The dollar on a relative strength basis is going to remain strong, but its absolute purchasing power is going to be destroyed by design as central banks collectively, because they do coordinate, are deliberately wiping out the purchasing power of their currency. Meanwhile, they're trying to tell you how they're fighting inflation. They're fighting it. Oh, they're fighting it all right now. They continue to inflate. Oh, we're sending another $10 billion to Ukraine. Did you hear about this one? Yeah, but this time it's for humanitarian aid on top of the unbelievable amounts, billions and billions and billions of dollars in military aid. So just, that's part of the mechanism here. Pull cash into the future, use it to disperse wherever they have to keep central banks, at the top of the pyramid here. And they are more than happy to lend. Where does this cash come from? We don't have a war chest anywhere. No developed nation, this, on the planet has a war chest somewhere where they can just pull funds out of. No, we have to borrow it. Okay. It's an amazing mechanism to watch, people, but that's where we're at. It's insane. All right, so with that said, that's where we stand. We got a market today that's looking to at least rebound this morning, despite risk in this market rising. Overwhelmingly, all of you believe we're going to break 300 with regard to the MMRI. We're going to see how that plays out moving into next month or by the end of next month. Market ain't going to like that. I'm telling you right now. That would mean if the MMRI were to break 300, that would mean that the 10-year yield probably has broken well over 4%, and the relative strength of the dollar has gotten markedly stronger. And I can't imagine a scenario where the market's going to enjoy that, unless, of course, the Federal Reserve starts buying large cap stocks, which they do. I think we can be clear on that. The Federal Reserve buys the market. Not only are they buying all the debt here, becoming a lender and buyer of last resort, they buy large cap stocks, companies, to prop up the market. That's what they do. You're not supposed to know that, but that's a fact. All right, people, look, lots of stuff in this video. Very important, I think. At least I would hope you would agree. If you do agree, please hit the thumbs up down here. Get this video out there. Share it. This guy here loves you a lot. I mean that from the heart. And I will see all of you at the end of the day. And it's going to be just freaking fantastic. See you later.